Hello everyone and welcome to this lesson on depreciations for IBDP Business Management Higher Level. In this video, we will explore what depreciations means, why it is important for business, how it appears in financial statements, and how it affects profit. We will also practice paper 2 style questions using real business example, just like you in your IB exams. By the end of these lessons, you should be confident in calculating depreciations, explaining it is important, analyzing its impact on profit, and evaluating different depreciations methods. Depreciations refer to the decrease in the value of fixed asset over time. This decrease happens because of use, wear, and tear, or aging. Example of fixed asset include machinery, vehicle, and equipment. Business record depreciations as costs because fixed assets do not last forever and gradually lose value. For example, if machine is bought for $10,000 and used for 5 years, it will lose part of its value each year. Understanding depreciations help business record more accurate financial informations. Depreciations is important because it's helped business calculate more accurate profit. Instead of recording the full cost of an asset in 1 year, the cost is spread across its useful life. This matches costs with the revenue and the asset helps to generate. Depreciations also support better decision making, such as pricing, budgeting, and asset replacement planning. Without depreciations, profits would be overstated, especially in the year of asset is purchased. On the balance sheets, fixed assets are shown at their net book value. This calculated as original cost of the asset minus accumulated depreciations. For example, if a machine originally cost $10,000 and $2,000 of depreciations has been charged, the value shown on the balance sheets is $8,000. This reflects the reduced value of the asset over time and gives stakeholders a more realistic view of business asset value. Depreciations is recorded in expenses in the profit and loss statement. Although no cash is paid, depreciation still reduces profit. This is important because accounting profit should reflect all costs, not just cash outflows. Recording depreciations help ensure the profit figure is fair, reliable, and suitable for comparisons across different years. Because depreciation is an operating expense, it directly reduces profit for the year. However, it does not affect cash flow. The difference between profit and cash flow is very important in business management. A business may report lower profit due to depreciations, but still have strong cash flow. Normally, IB examiner often rewards students who clearly explain these distinctions. Next, we have the straight line method of depreciations. Reduce the asset value by the same amount each year. It is calculated by subtracting residual value from original cost and dividing by useful life. This method is simple, predictable, and commonly used in exams. It is suitable when an asset is expressed to be used evenly over time, such as office equipment or cafe machines. Now let us see the paper 2 case BrewBean Café. Let's now apply depreciations to paper 2 style case study. BrewBean Café purchased an espresso machine for $10,000 with a useful life of 5 years and zero residual value. The business uses the straight line method. You are asked to calculate annual depreciations and explain why depreciations is important, analyze its impact on profit, and evaluate whether this method should continue to be used. Now let's try to answer the calculations. To calculate annual straight line depreciations, we divide the cost by useful life. $10,000 divided by 5 years given as an annual depreciations of $2,000. This calculations is worth 2 marks. So accuracy and clear working are essential. Recording depreciations is important because it spreads the cost of espresso machine over its useful life. This results in more accurate profit figures as the full cost is not charged in 1 year. In IB exam, this explanation should clearly link depreciations to profit accuracy and decision making. Next, the depreciations reduce BrewBean Café profit by $2,000 for the year. This lower profit may reduce tax liability and affect performance indicators such as profit margins. However, depreciations does not involve a cash outflow, so cash flow remains unchanged. This analytical response compares profit and cash flow, which is key for higher marks. The straight line method is suitable because the espresso machine is likely to be used evenly each year. It's simple, predictable, and easy for stakeholders to understand. However, if the machine experiences uneven usage or rapid technological obsolescence, this method may not reflect true value loss. In such cases, an accelerated method could be more appropriate. Overall, BrewBean Café should continue using straight line depreciations if usage remains consistent. Now, we move on to the unit of productions method calculates depreciations based on actual usage rather than time. The more an asset is used, the higher the depreciations charge. This method is suitable for machines, vehicle, or equipment where wear and tear depends on output. It provides a more realistic cost allocations when production levels vary. We can try to apply it to the AquaPure Ltd as the paper 2 question style. AquaPure Ltd purchased a filling machine costing $20,000 with a residual value of $2,000. This machine has a total production capacity of 90,000 bottles. In 2025, 30,000 bottles were produced. This question asks you to calculate depreciations using the unit of productions method and evaluate whether this method should be used. The depreciable value, you can see later on after you try read these questions. Now, let's see the calculations here to calculate depreciations expenses. The depreciable value is $18,000. Dividing by 90,000 bottles gives a depreciation rate per unit. Multiplying by 30,000 bottles results in a depreciation expense of $6,000. An advantage of this method is that it reflects actual usage, leading to more accurate costing. The $6,000 depreciations reduced AquaPure Ltd profit for 2025. However, cash flow remains unchanged. This method improves accuracy in high production years, but makes profit less predictable. Overall, AquaPure Ltd should use the unit of productions method if output fluctuates significantly. It simplifies the stability are the priority straight line depreciations may be more suitable. To conclude, depreciation is a crucial accounting concept that helps business measure the true value of their fixed asset over time. By recording depreciations, business can calculate more accurate profits, make better financial decisions, and present reliable information to stakeholders. In this lesson, we explore how depreciations appears in financial statements, how it affects profit without impacting cash flow, and how different methods such as straight line and unit productions can influence business performance. Remember, in IB exam, success comes from not only calculating depreciations correctly, but also explaining, analyzing, and evaluating its impact using real business context. If you found this lesson helpful, don't forget to like the videos, subscribe to the channels, and turn on notifications so you don't miss the future business management exam tips. Thank you for watching and see you in the next lesson.